Hello everyone, and welcome back to the channel. Today, we are taking a closer look at Alibaba, better known by its ticker symbol BABA. We will discuss the company's financial performance, growth opportunities, valuation, analyst expectations, and the potential risks investors should consider. By the end of this video, you will have a much clearer understanding of whether Alibaba could be an attractive long-term investment. Alibaba is one of the largest technology companies in the world and a dominant force within China's digital economy. The company owns several major platforms, including Taobao, Tmall, Alibaba Cloud, Cainiao Logistics, and various artificial intelligence businesses. Over the years, Alibaba has expanded far beyond e-commerce and has built a diversified business model capable of generating billions of dollars in annual revenue. Alibaba currently has a market capitalization of approximately $286 billion, which places it among the largest technology companies in the world. Despite facing regulatory pressure and slower economic growth in China, the company has maintained its strong market position. This enormous size gives Alibaba a significant advantage because it can invest heavily in innovation, infrastructure, and future growth opportunities. The company generated approximately $144 billion in annual revenue, demonstrating the strength and stability of its business model. Unlike companies that depend on a single source of income, Alibaba benefits from multiple revenue streams, including online commerce, advertising, cloud computing, logistics services, and digital entertainment. This diversified structure allows the company to remain resilient even during challenging economic conditions. Alibaba reported approximately $14.9 billion in annual net income, while earnings per share reached $6.41. These impressive figures show that the company remains highly profitable despite increasing competition from rival businesses. Strong profitability also gives management the flexibility to invest aggressively in areas such as artificial intelligence, cloud infrastructure, and international expansion. One of the most attractive aspects of Alibaba is its valuation. The company currently trades at a price-to-earnings ratio of approximately 18.8. Compared with many leading technology companies in the United States, Alibaba appears relatively inexpensive. Many investors believe that concerns about regulations and geopolitical tensions have pushed the stock price below its true value. Alibaba currently offers a dividend yield of approximately 0.84%. Although this yield is not especially high, it indicates that the company is beginning to focus more on rewarding shareholders. At the same time, Alibaba continues to invest heavily in research, development, and future growth opportunities, which could benefit investors over the long term. Looking at the chart, we can identify several important price levels. The strongest support zone appears between $90 and $95, where buyers have previously entered the market. The next major resistance zone is located between $140 and $145. If the stock successfully breaks above this level, investors could potentially see additional upward momentum toward the $160, $180, and even $190 levels. According to analysts, Alibaba still has substantial upside potential. The average one-year price target is approximately $189.97. Representing a gain of more than 55% from the current price. Analysts have established a minimum target of $157.98 and a maximum target of $239.40. These estimates indicate that many professionals remain optimistic about the company's future growth prospects. Despite the positive outlook, investors should carefully consider several risks before investing. Chinese government regulations continue to create uncertainty for technology companies operating in the country. In addition, geopolitical tensions between China and the United States could affect investor confidence. Competition from companies such as JD.com and PDD Holdings also remains a significant challenge for Alibaba's management team. Overall, Alibaba remains a strong company with an attractive valuation, impressive revenue growth, substantial profits, and promising opportunities in artificial intelligence and cloud computing. However, investors should remember that the stock still carries significant risks related to regulation and international politics. For long-term investors willing to tolerate volatility, Alibaba may represent an interesting opportunity with considerable upside potential. Thank you very much for watching this video. If you found this analysis helpful, please like the video, subscribe to the channel, and turn on notifications so you never miss another stock market update. I will see you in the next video.